Yen rallies on hints of Baj policy shift. The yen extended its towering rally on Friday and marched toward its best week against the dollar in nearly 5 months, as traders ramped up expectations that the end of Japan's ultra-low interest rates was closing in. The broad strength from the yen kept a lid on the dollar, which stayed on the defensive ahead of the closely watched U.S. non-farm payrolls report due later on Friday. Business Financial Data, September 2023 quarter. For all business financial data, BFD, industries, in the September 2023 quarter compared with the September 2022 quarter. Sales were $191 billion, up $2.8 billion, 1.5% purchases were $134 billion, down $997 million, 0.7% salaries and wages were $31 billion, up $2.2 billion, 7.6% operating profit was $26 billion, up $1.7 billion, 6.9%. When adjusting for seasonal effects, in the September 2023 quarter compared with the June 2023 quarter, sales in 11 of the 14 New Zealand Standard Industrial Output Classification (NSIAC) Level 1 industries increased. Manufacturing, down $920 million, electricity, gas, water, and waste services, up $831 million, and retail trade and macro and markets. Does the U.S. need rate cuts in March? The market has read very much into the moderation of economic data the past month. We struggle to see the case for the Fed to cut rates in March. What a difference a month can make. After a little softening of economic data, the market is suddenly calling for rate cuts already in March. We believe it take much longer before the Fed can be convinced that inflation is truly under control. With the U.S. labor market still very much on a strong footing and U.S. financial conditions now on the easy side, it will not take much for the economy to start firing up again. 2/3 of Baj watchers expect end of negative rate regime by April. Bank of Japan watchers are increasingly expecting the bank to achieve its inflation target, with a growing majority forecasting authorities will end the world's last negative rate regime by April, according to a Bloomberg survey. More than 2/3 of polled economists see the Baj scrapping its negative rate by April, with half of the 52 respondents saying it will happen that month. In the previous survey in October, 29% saw the move coming in April. What happens after a 20% up year in the stock market? A reader asks. Sure, it's great the S&P 500 is up 20% this year, but aren't we just pricing in the inevitable Fed rate cuts in 2024? Should we really expect the market to go up again next year after surprising to the upside this year? Color me skeptical. Full disclosure, I'm naturally bearish and take a bit of an anti-Ben stance about the markets. See, this is what makes a market. It's fair for anti-Ben to ask if the current run-up in the stock market is pricing in rate cuts for next year. The stock market is forward-looking after all.
Thank you.